Hey guys, so this is today's smart money breakdown video. I'm just going to be going over some of the stuff I'm looking for. I can't really go too in depth because that is reserved for our VIP members, but I can give you guys some general areas and kind of what I'm looking at. So we're going to start on GBP USD, and before I really get into it, I'm going to say that it's a bit conflicting right now with some of the XXX USD pairs because a lot of them look like they might head down, but this certainly looks like it's going to head up, and I will show you why. So, as with last week's breakdown video, we marked off the higher time frame swing points. So they were color coded, and in future videos, I can go in and color code. But for today's video, I'm going to just directly go over like the levels that I'm looking at for swing points. And I mean, a lot of these don't change. All this price from last week has not changed. So we had these swing points here, 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 and here. And then this is really just one ginormous leg. And then coming into a level of interest, this last up close candle before the down move, we are looking at that. And just from a structural standpoint, we're making a really nice kind of continuation wave play here. So higher high, higher low, higher high, higher low, higher high, higher low. So logically, you would expect another higher high, right? So looking at this, we have a lot lining up, but really we're just looking for a retracement into deep prices or deeper prices relative to this leg. So looking for price to come back down into here, and then after coming back down into here, we'll be looking for something on the lower time frame, something that we look for often to confirm the up move. This is obviously the last down close candle before we continue back up, and we're looking for price to come back down, and from there just kind of reach our higher time frame level of interest. And as I said, we will be looking for something on the lower time frames to confirm this move, and it gives us better entries and tighter stop losses, which is always great. So that's a level of interest. We're expecting this to continue higher. And now the issue, or not really issue, but the pairs that are ending in XXX USD aren't necessarily correlating right now. So GBP USD looks like it's going to head up, while NZD USD, AUD USD, and Euro USD also look like they're going to continue down. So here on AUD USD, we've had no relief to the downside. Like we have not, this is just one ginormous leg. And in all reality, this is one ginormous leg too. And the only swing points you can really see are here, 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 and here. So this huge leg is a huge leg within this bigger leg that has had no correction in it at all. So, but you shouldn't wait for price to come all the way back down into these levels, like we kind of talk about coming into deeper levels to buy back up, right? Because you don't want to. I mean, it's said so often, you don't want to buy high and then sell low. That doesn't make sense. So the opposite of buying high is buying low, right? But at the same time, you shouldn't wait for price to come all the way back down. Like I said, you should keep playing with price going up if it's trending up, if that's what you can do. So AUD USD, we've been heading up for almost a year now. So you shouldn't try to look to really sell it unless you get an opportunity like you have in here. So what you can see in here is we had a high right here, right? Or sorry, so this is NZD USD. I think I said AUD USD, but the idea is that we are making lower lows and lower highs, right? And I guess the reason I said AUD USD is because this chart's almost identical. You can really see it. So they look very, very similar, okay? And just looking here, again, we haven't had much relief in this market at all. This is one huge leg, and it looks just like this. It's just one massive leg, but that doesn't mean that you need to wait for price to come much lower to buy it up again. You should keep playing buys or in the general direction of trend unless you get a really, really nice selling opportunity. And that is the case here. in these, so a selling opportunity in this market would be counter trend, correct? Because trend is up, so counter to that would be down. And the clearest counter trend plays occur when you get very clear structure that tells you that you're going to go short in the market. So within here, you have this, 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 and this. And it's like, well, okay, we didn't break this, so we can, continue to go long. But what you can look at really is this opportunity here. Okay, while this is true, you can clearly see that we are making lower highs and lower lows, right? Like this. And notice what happened. We had this up close candle that swept this liquidity and came into the last up close candle here. And then pulling a fib from here to here on this leg, we just came into deeper retracement levels and began to reject. So we come into this candle, reject off of 78.6 fib. So that is an area of confluence to go short. And then a negative 27, which a lot of people use, a negative 27 extension lines up with this level of interest in the market, right? So this is a trade where you really build confluence and look at, okay, higher time frame, I'm heading up. That doesn't mean A, that you need to wait for price to come all the way back down here to buy it again. And it also doesn't mean B, that you can't look for sells if you get an opportunity. This is a clear selling opportunity. But when you take selling opportunities in markets that are going, in an uptrend and vice versa, if you're taking buying opportunities in a downward trending market, you need to really confirm the move. And confirming the move is based upon building confluence around it. Like I said here, I pointed this out. We have this structure, but within this, we're really making lower highs and lower lows, right? And then when you add, the Fibonacci's and you add the buy, the buying volume right before the selling in coming into that, and then where your extensions line up and several other things and levels of interest, you can be pretty convinced that you're going to have a move to one side or the other, even though it's against the general trend. You can't, you don't have to avoid counter trend plays, but you need to be wary of them and just know that they are more risky. However, passing them up, can be detrimental at times. Like on this trade, if you were risking 1% of your account, you would be up about 2.2%, even though it's against the trend. So really the point that I'm trying to make is, be aware of structure on all time frames, because if you had ignored this, you would have ignored the sell here and you wouldn't be, making a return on your account. So anyway, AUD/USD, I expect it to continue lower, really into 762. On the contrary, I expect GU to continue up into our higher time frame level of interest. And then more similar to AU is NU, I expect NZD/USD to ultimately continue down. I don't have a clear level yet, but you can see that it is maintaining this structure within this higher time frame leg. Like I said, this is just like the boxes. I'll explicitly go over it. So we had this move up, correction, this move up. This is one leg. Within this leg, you had little structure within here, and then we broke it, and we are continuing to make lower highs and lower lows just like this within, again, a higher time frame uptrend. So this is counter trend movement, but it is playing out very nicely, and I expect price to continue lower. So, and really it might take the rest of the week to do that. So for the week, maybe 0.70, and then on AUD/USD 0.7620. But like I said, the entry that we caught was already here, and we are in profit on that, or at least anyone who took the trade or saw it. It is up right now. And then with this, the only concern is if GU continues up, it might pull NZD/USD and AUD/USD with it. But with the way that things are not correlating, I expect these to play out independently and, kind of follow the structure that they are each making. GBP/USD or GBP/JPY, I'm sorry. So we have all this liquidity here, a ton of equal highs, and then a higher time frame level of interest. Here are our swing points on the higher time frames. We had this here, and then a higher low, higher high, higher low, higher high, higher low. And really, this is all just one really big leg. And then if we were to come above this or come to our level of interest, basically at 143 flat, we would be taking out this high right here, which could cause us to go much lower, as we do have lows here and lows here that we could possibly take out if we get a really nice, you know, buy up here to take all the stop losses here, and then we just come right back down. That would be the sole point of a move like this, would just to be to take stop losses and then continue in the direction that it's really intended to go. Even though, like I said, we're making, we're kind of making this bullish structure here. You can't expect to have bullish structure with no corrections. And in this case, we really haven't had a lot of corrections. So that's kind of what I'm thinking on GJ. We'll be looking for specific things in our VIP community to enter a trade up here, but we're definitely looking for something to happen really within this range. It depends on how far up the move is and when we get our confirmations. So CAD JPY, really, we are making bullish structure here, 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 and here. And this is kind of a higher time frame. You can see it on the daily. We are making bullish structure. We have a higher time frame level of interest right here, and we also have some selling volume right here that we have not met, and we have a deep retracement. And then again, something that lines up is this. These extensions are lining up with levels of interest, which can really give you more conviction that the level of interest you have based on specifically the Fibonacci tool is a valid area to look, because when you pull it, its extension lines up with a level of interest that is almost a psychological level, and coming into here lines up with the level of interest that we have right here as well, this mentioned selling volume before the move up, and then we have equal highs. So really, it's about building confluence, going with the trend. And if you're going against the trend, like I mentioned on NZD/USD and AUD/USD, always make sure you have appropriate, at least short-term structure, because counter trend plays are short-term plays. If something is long-term bullish, anything that goes against that would have to be shorter than the longer outlook, right? So make sure you have, ample evidence to really, structural evidence specifically, to go short. And so that really, all I'm saying with that is take the higher time frame general trend plays, because they're reliable, and you shouldn't hesitate to take them if they meet your rules. But if you're taking a counter trend trade, make sure you have ample structural evidence to make sure that you can make a movement against the dominant trend. So Euro USD, this is a level we talked about last week, right in here. You can see it on the 8-hour. We had this inefficiency in the market, 50% of it that met and was lined up with the 78.6. Again, building confluence with levels of interest based off of smart money ideas and certain levels based on fibs. It really lines up. It's helpful. We had equal highs here that we took out with the movement that filled the 50% imbalance. And then again, the extensions are lining up with levels that we are looking at. The last selling volume before the movement up and an inefficient level in the market lines up, building confluence yet again. Structurally, higher time frame, we are obviously bullish, just like NZD/USD, AUD/USD, GBP/USD. They haven't had relief. This is really one big leg, but within this leg, we had these higher time frame swing points. And then on the time frames that we're looking at now, what we really had is something like this. It's by no means pretty, because we did consolidate pretty bad for a while, but we had this, and then we broke this swing point here. And then what did we do? We come down, and then we make a lower high. And so lower low, lower high, lower low, expect a lower high, and continue down until a level that lines up with our Fibonacci extensions and a level of interest, psychological level 1.2 as well. NZD, JPY, again, building confluence, right? We have these swing points. This is pretty clear. Higher high, higher low, higher high, higher low, higher high. So those are your higher time frame swing points. And then within this move here, we had this here. Oops. We had this here, this here. And then even on the smaller time frames, we had a little one here, and then this here, and then right here, there's a little discrete high. So it's all about being, being aware of the time frames in which you're looking at. So higher time frame, here are legs. Lower time frame, here are our legs. And then even on the lower time frames, we're doing something like this here, this here, this here, and this here, all within a higher time frame uptrend. Definitely trending up in this market, right? So continue to look for buys, but when sells do become evident or obvious, play them. So we are clearly making bearish structure, lower low, lower high, lower low, looking for a lower high that again is almost not evident, but you have reason to believe it can happen because we have this last buying volume before the selling off that took out this liquidity. This wick is liquidity. It took it out. And then we have a Fibonacci level that lines up with our level of interest. And again, the extension lines up with another level of interest, a selling candle right here before the buying up in an uptrend. So it would make sense for price to come back down to that level. G-Chef, we're really kind of getting to the end. There's not much left. We were making this bearish structure, and then here we created equal highs, and we know that price likes to take out equal highs. And on the lower time frames, we are really following nicely. We had this demand here. They got met with this demand here. They got met with this right here. So we would expect price to come back down into here. And with the VIP community, that is a level that we're looking at. Again, we will be looking or seeking confirmation at this level to enter the trade and hopefully tighten up our stop loss. But this is a really nice trade. And just to reiterate, the structural points, we were really in, like I said, kind of a downtrend on the daily here, downtrend, but we made equal highs. And clearly on the lower time frames, even though we're in a higher time frame downtrend, we were making bullish structure. Let me get rid of this here so you can really see it. So with what we were doing is we were continuing in this manner here, just like this. And then we made equal highs here and then made a little bit of a higher low, higher high, higher low, higher high. Now we expect another push to the upside. So this is lower time frame structure with the smaller, I guess, I don't know what to call those, half ellipses, and then higher time frame structure here. So that is GBP CHF, and then Euro JPY. I just want to point out that we came into the last down close candle here and reacted nicely. But if you look at a higher time frame perspective, these are our higher time frame swing points. These bigger ellipses or half ellipses, boom, boom, higher high, higher low, higher high, higher low, and then higher high. So if you have a higher high here, I mean, really, you could adjust this fib to look more like that. And then you would want to be buying down in here, not all the way up here. You don't, like I said, way back in this video, don't be buying at high prices. That doesn't make sense. You want to be buying at lower prices. That's just a practical, I guess, life rule. It's a rule of thumb. Don't buy something, if you can get it cheaper. Don't buy something at a certain price if you can get it much cheaper. So in this case, people may have been buying here, right? Other people who, you can know smart money and know that this is an inefficient price with, some buying or selling volume before the buying, but that doesn't mean that you should just blindly take it off of that. Sure, you got a reaction, but at the end of the day, you're in a higher time frame uptrend. at least on the daily, I mean, higher time frame, you're kind of in this consolidation region. You're not making higher, higher highs and higher lows. You're kind of trapped, but at least on the daily, at meaningful, relevant price, we're definitely bullish. Higher high, and you can look at it from here. If you had this swing point and this swing point, you broke this. So now you are bullish, higher high, higher low, higher high, higher low, higher high, and you'd expect a pullback into deeper levels of price, not somewhere all the way up here. You're likely going to get taken out by the market once it decides to make its overall pullback. So that's what I'm looking for on the pairs that I covered. And like I said, with some of the other ones like GBP USD, NZD USD, AUD USD, Euro USD, we can have, a bit of conflicting analysis, but at the end of the day, I think that really GBP USD is the only XXX USD pair that is going to continue long, and the rest will most likely continue short. But I think that, in everyone's kind of right, they should all do what we are expecting them to do. And like I said, with some of the higher time frame analysis, you can be what's the right word I'm looking for? You can be almost convinced that you will get the movements laid out here. This is a general idea. And also on the dollar index, we are looking at a push up and then a move down. So we could get some short-term strength. We could find ourselves pushing up a little bit, but overall weakness. So dollars weak would mean that these will continue up. Dollar strong means that the XXX USD pairs will continue down. But we did have this massive buying volume before the selling off, which makes us think that we will first head up or have a strong dollar. And then after we meet this level, we could have a weak dollar. But that is what we are looking for. Like I said, general idea, nothing's guaranteed. It can always change, but going into market open, this is what we're looking at. So I hope you guys enjoyed, and we will speak to you all soon.